And now that we're starting to break out, and you look at this sort of breakout of the last contraction period, and obviously 2020 was exceptional, so we're not looking to repeat that. But generally, if you look at the previous times we've gone out of a contraction period, that has been what I define as like the super bullish liquidity regime. So, global liquidity can only contract or go sideways for a certain amount of time because the whole system is so indebted that that default risk rises, and also just the interest cost on debt becomes too excessive. So there is an impulse. There's always an impulse to add liquidity, and so like a beach ball under the water, if you keep it down for too long, it's going to burst out, and we're starting to break out now. And so in the past, when we've seen a breakout of the previous all-time high in global liquidity, Bitcoin's sensitivity to the changes in liquidity triple at least, sometimes 4 or 5x. So
Wow.
in my analysis, global liquidity goes up by 1%, Bitcoin usually rises about 7%. But in these particular regimes, that goes to 20 to 30 times. So a multiplier of 5. And what's really interesting is that we got the breakout in global liquidity in early April as the markets were sort of tanking. So that was this low that we went through, which really wasn't much to worry about, like in terms of Bitcoin pullbacks, but it felt pretty nasty at the time. Massively outperformed the S&P, massively outperformed the equities on a volatility adjusted basis, even though, it was down 30% and the S&P was down 20%. On a risk adjusted basis, massively outperformed equities. And so when global liquidity broke out in early April, Bitcoin rallied 40%. Global liquidity from that breakout is up about 2%. That's roughly what it has done in those previous bullish regimes where global liquidity breaks out to new all-time highs. You get a sensitivity factor that is factors higher than it typically is. And so for me, it's interesting that, we're not overbought, based on liquidity. Every new dollar that's created, whether it's even through like the US dollar weakening or depreciating, is an easing on financial conditions, it all adds liquidity into the system or makes financial conditions better, and the relationship is strong. And so, I'm looking at now a market that is not overheated at all. In fact, it's doing what it should be doing, and it's not doing anything excessive.